Hi there, welcome to kneppyinvests. In this quick take Appendix 4C video, I'm going to look at a company called DW8 Ventures. This company was an ASX market darling between about June 2020 and April 21 when the share price went from 1 cent to a high of 20 cents. That's a 20 bagger for those shareholders who held throughout that period. Over the past month or so, the share price has dropped back to 9.5 cents. So in this video, I'm going to have a look at not only their Appendix 4C, we'll have a look at some facts around the company and why I won't be buying into this company anytime soon. We'll look at the cash receipts history going back to April 2017, and then we'll finish on looking at a couple of charts, the weekly and daily charts for DW8 over the past 3 years and 6 months. So before we look at their Appendix 4C, let's just look at some of the facts around this company. DW8 Ventures invest in tech companies that service the wine industry. Their main investment is Wine Depot, and they streamline wine and beverage distribution. The ticker code for DW8 is DW8, and it seems like one of many companies now appearing on the ASX with a number in their ticker code. I have no problem with that. It makes actually a little bit interesting to have numbers in the ticker codes these days. But it seems like there's a plethora of these companies now just popping up. Now, when you look at the valuation of DW8, this is where I have a problem. The market cap for DW8 currently is 175 million, and when you look at the revenue over the trailing 12 months, only $1.4 million. So the market is expecting revenue to explode for this company over the next few years. There is, without doubt, an asymmetrical risk-reward imbalance right now with DW8, and it's actually like that for a lot of companies on their ASX. And what that means is the imbalance is more towards risk. So if you're buying into DW8 at these prices, you're taking on a lot of risk with little reward. And you want to do the complete opposite. You want to buy into a company with low risk and a higher probability of reward. So in a way, DW8 is priced to perfection. Nothing can go wrong for this company to justify this valuation. Now, you could say over the next few years, they could quadruple, triple the revenue, and that might justify the valuation, just might. There's still operational cash flow negative, and looks like that's going to continue for the foreseeable future. And you just look at the price to sales ratio, 125. A typical price to sales ratio on the high side, you'd think maybe 20 to 30, and this is 4 times that. But again, you could argue that's off a low base of revenue, only 1.4 million, and they could quadruple that in the next few years. So if you want further information on DW8, just look at their Appendix 4C that they released on the 27th of April. Onto the Appendix 4C for DW8, and first up always, when you look at Appendix 4C, for me anyway, is the cash flows from operating activities. And I focus on 2 numbers here. The first number is the receipts from customers. Now, in isolation, this means nothing because you need to know the trend. And we'll look at that trend in the next slide. But for the March quarter, DW8 received $631,000 in receipts. The most important number, however, is right down the bottom. And that tells you if the company's operational cash flow negative or positive. And that's important because if they are negative, that means they are burning through cash. And they need enough cash on hand to continue as an ongoing entity. And the good thing for DW8 is they have enough cash. In fact, they increased their cash on hand from 6.9 million to 8.4 million. So how did they do that if they were operational cash flow negative? Well, there are quite a few ways they do that. The 2 main ways is capital raisings or borrow money from a bank or a financial institution. In DW8's case, they actually had some options that were exercised, and they received $3.1 million from the exercise of those options. Unfortunately, the exercise of options can be, well, they're not really reliable. So more than likely, they won't receive any more cash from the exercise of options, or not a lot of cash in the next few quarters. So it's not a really reliable way to receive cash. You want to become operational cash flow positive. because when a company becomes operational cash flow positive, they can grow their business through their own operations. And when a company can do that, it is an inflection point. It's an important milestone for any company, and it's a milestone that all management of all companies like Digital Wines should be seeking. Here we have the receipts history for Digital Wines going back to July 2017. The period between then and April 20 looks ugly. Low receipts, in fact the highest receipts we did see was in April 2018 quarter, 107. There was a couple of quarters where no receipts were given to this company at all, no growth. It looked ugly, and then the pandemic hit, and this company benefited from the pandemic. You can see that if within or in the growth rate of the receipts from 77,000 to 631,000. And if you calculate the compound quarterly growth rate of receipts, you get 69%, which is fairly large for a quarterly growth rate. So more than likely that they won't be able to continue that growth rate. And we have already seen that slow down in the most recent quarter. But if they can continue to grow at significantly high growth rates, maybe the valuation of the company at 175 million can be justified. And one of the reasons why maybe the share price has weakened over the past month is that the cash receipts in the most recent quarter were lower than the last quarter in calendar year 2020. There could be some reasons behind that. Maybe it was the festive season. Maybe this would be an ongoing thing in future years, that they have a better quarter in the last quarter of the calendar year. That's all possibilities. So really important now to see if this was just a blip in the growth rate of the receipts or if this is a new trend. On to looking at a couple of charts for Digital Wines, and the first chart is the 3-year weekly chart, and then we'll look at the 6-month daily chart. When we look at the 3-year weekly chart, we don't see anything happening from May 2018 to early June 2020. Share price was going sideways. In fact, the share price got as low as 0.7 cents. Yes, 0.7 cents, less than a cent. And we saw fairly low volume as well. And then something happened in early June. The company released I think they were releasing like one company update every week, it seems like. And the most important company update was on the 10th of June, because that's when the market got really excited with Digital Wines, right there. Share price increased 30% on that day on high volume. And when you see share price increasing on high volume and corresponding to a good or positive announcement, that can be a giveaway sign of a potential re-rating in the share price or a breakout in the share price. And this breakout in the share price for Digital Wines was very successful. Share price rose from 1 cent on that day to a high of 20 cents in middle of April. So that's a 20 bagger in about 8 months. Now, over the past month or so, we've seen a bit of weakness in the share price. It's fallen from 20 cents to a current price of 9 cents. And that has coincided with the release of this most recent Appendix 4C. So maybe the market saw the decrease in cash receipts, and that was a bit of a negative sign there. But if you look at the chart, look at the volume, there are a few positives here. The share price decrease has corresponded to a low volume or period of low volume. In fact, the volume has been decreasing as this decrease in share prices has continued. That's actually quite positive. That tells you that the sellers are drying up. And if the sellers are drying up, we might see a little bit of a period of consolidation in the share price. And if we do see consolidation in the share price, around these prices, 8 or 9 cents, that would be fairly healthy. And then all we have to do is wait for another breakout in the share price, just like we saw in the start of June in 2020. One of the reasons I like to compare daily and weekly charts for a company is you can get different perspectives by doing that. In fact, that's absolutely true for Digital Wines. When I look at the weekly chart, I'm actually fairly bullish, but I get the complete opposite when I look at the daily chart for the company. In fact, I'm looking at this and I see bearishness. So before I get to the bearishness over the past month or so, let's go back in time and look at the period between November and the 15th of February. Share price was going sideways, consolidating between about 4 and 5 cents. And when a share price is consolidating, what you want to do is wait for a breakout in the share price. So what you really want to look for is a positive announcement, share price increasing on that positive announcement with high volume. And we received that on the 15th of February for Digital Wines. They released an announcement about a partnership with Vivino, and the share price popped up about 15% on that day, and then we saw high volume. In fact, the volume in consecutive days was higher than the past 3 months, so 2 consecutive high volume days. And this breakout was successful because we did see the share price quadruple in 2 months, went from 5 cents to a high of 20 cents. And then we saw the share price weaken. We're going from 20 cents to a current share price of around 9.3 to 9.5 cents. And during that period, we did see the company release their most recent Appendix 4C. And maybe the market saw that the receipts had come back, and that's why the market has become a little bit more bearish around Digital Wines. And when I look at this chart, particularly over the past month, I do get a bearish vibe. And we saw the share price decrease over 4 consecutive days from about 14.5 cents to 9 cents. That's a fairly big decrease over 4 days. Sometimes when you see that sort of decrease, the share price might bounce. But the share price in Digital Wines hasn't bounced in the last 2 trading days. It's just gone sideways. And that tells me that there's a bit of bearishness there. You'd rather see a bit of a bounce. And when the share price goes sideways after 4 consecutive large down days, it just tells you it's just, catching breath. And there could be a chance for further weakness in the next few weeks. So when I look at the daily chart, I am bearish. But when I look at the weekly chart, I am bullish. So conflicting feelings right there. That's another reason I'm staying out of Digital Wines for the time being. That is all I've got for this quick take Appendix 4C video for Digital Wines. If you are a shareholder, I'd love to hear your opinion on this company. If you have any questions or any comments, make sure you leave it in the comment section of this video, and I'll answer anything you have to say as soon as possible. Otherwise, I'm not a financial advisor, so if you do need to seek financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's all for this video. Have a good day. Bye.